You're still watching Business Incorporated on Channels Television. Let's head to the markets now, where Will comes in with the color red, unfortunately.
Well, I'm not being on red, but the red is on the screen. You have a shade close to this, but I don't want to start going into colors right now.
Wow. Tell me about color blindness.
Yes. No.
Tell me about color blindness.
I want to put you in that category right now.
Okay.
So let's just say that, Ini, you caused this. And okay. I put it to you, like Ladi was saying,
I'm that powerful.
Of course. Mr. Iwani did say that when you have that tint, even if it's a tint of red or something close to it, the market responds to it. Okay. So that's how powerful you can be.
Thank you for assigning such powers to me.
You're welcome.
But it's so sad that we've lost the 98,000 level. Yes. I mean, when we had intraday losses yesterday, I had hoped that by the close of trade that we would have recovered. Unfortunately, we went deeper into the red zone, and even this afternoon we've gone even deeper. I don't know if I should hope that there'll be a recovery before close of trade.
Possibly maybe bargain hunting, but we see investors taking down on FBN holdings. Profit taking is still there. We see Northern Nigeria flour is also going down. We see Dangote sugar also weighing on that index. So investors are selling off on some of these consumer goods.
It's weekend, I guess.
Some banking stocks.
It's weekend.
Oh, yes, you reminded me. I forgot.
What do I know?
So let's check out markets in Africa. Major stocks at intraday. Sentiments at the Nigerian NGX was down. It was lower by 0.2%. Seeing sell-offs, as I mentioned, in Dangote sugar and some banking stocks that weigh the index down. We look at it on the flip side. We see the South Africa's GSE is in the green at intraday. It was up 0.44%. Let's look at Egypt. EGX was closed Thursday, but closed in the green, 1.69%, still at 30,000 level. And Kenya closed Thursday's session in the red, 0.17%, hoping that they would make a rebound by the close of business today. But let's talk about what's going on and what's driving sentiments at the NGX. We're seeing news about PZ Cussons, but we have Onose Asotie Enaulo, investment analyst, Main Street Capital, to dig down on that for us. Good afternoon, Onose. Sad news. Well, it's not news that the market wants to hear right now, but PZ Cussons, the parent company of PZ Cussons Nigeria, has concluded plans to sell its African subsidiaries, citing depreciation of the naira as a major reason. That's FX, the big elephant in the room. Well, elephant is big anyways. And this is adding to the list of multinationals that are exiting Nigeria. So one of the giants, what impact should the NGX be bracing for when this company eventually exits Nigeria? What would it mean for the NGX?
Right off the bat, there will be like a depreciation in the, if they are going to sell it, we most likely would see them buy off all the shares, so it might now, depending on how the deal is structured, it might delist from, the NGX exchange, which is, just low-hanging fruits, the most obvious thing that will happen. But one thing that's really a bit more, should I say, concerning is PZ is a household name. They have, brand power, they have the goodwill, they have the distribution network, in Nigeria and everything. And if they are struggling this much to the point of the parent company having to sell off the subsidiary due to, tremendous FX losses, then now looking to other, consumer goods companies that are facing similar similar issues, similar FX issues. It's not a thing of, okay, so the ones that seemingly have not come out to the point of saying, okay, they want to sell, it's now, analysts, we now have to start asking ourselves, how bad is the damage? Because now we knew that, there was some damage from, FX, the FX losses, but so far, nobody is coming out to say, okay, you know what, it's so bad that we do not really want to do this anymore. The worst we've seen is our companies like Procter & Gamble that are leaving Nigeria. But then now it is the question of how bad is the damage going on? And other companies, should we not expect even worse situations going forward? Because then you might think, okay, we might be out of the brunt of the shock which happened last year. So maybe as time moves on, other companies begin to to recover. But if a huge company like PZ is saying no, they're at a point where they want to sell, then looking to other companies, how bad is the damage to their financial sheets? And then moving forward, should we now expect similar degrees of damage from other companies? And then the effect that all of that will now have on the NGX is what I am even really more concerned at this point, even beyond just the specific singular sale of PZ.
It's quite sad, but what I just want to know, if inflation, let's look at inflation right now, is tapering 2 months now, and we're looking ahead for the MPC meeting next week. If we see a hold in that, maybe they come out with an announcement that they're holding rates, is this going to help in any way, especially if cost of borrowing doesn't keep going up, inflation is going down? And the FX possibly will see a steady in the Naira. What do you see? Is there any chance that these consumer goods companies may not go down or plan to exit if they're multinationals, or if they're local companies, they might not see a continued downturn in their production or their revenue turnout?
Well, so yes, inflation has we've seen this inflation for the last 2 months. I think the best case scenario, even with the MPC meeting coming up, is best case scenario they hold rates, because I do not reckon that now that they have possibly begun to see some effects from all the rate hikes that they've been doing since 2022, 2023, that because we've seen 2 months of disinflation, that the MPC will come and say, okay, now I want to slash rates. So I don't think slashing rates is even on the table. Now, if it happens, it will be very surprising. But in the worst case scenario, they hold rates, because even the CBN right now has a lot of incentives to keep rates stable. Even if you go into a fixed income, but then that's beyond the scope. But if they hold rates, these companies still have a lot to battle through. Because one, the damage has been done. For a lot of these companies, their equity has been completely eroded. For PZ, they were like a negative 27 billion in equity. So now, even if they can't keep their revenues up, they still have a lot of economic challenges, economic headwinds that are still present despite lower inflation numbers. Like one, transport costs are still really high. And with everything that's going on with Dangote and the plan to sell fuel at possibly even higher, even if they do buy from Dangote, that cost might not go away. Right now there's still the issue of maybe issues getting raw materials. For FMCG companies, they might need a lot of raw materials from to import raw materials, and so there's still the FX situation. So even if we do see inflation, we do see disinflation, and even if the MPC keeps rates the same, a lot of the factors that are still messing up these companies, businesses, those factors are still there. That's one. And two, they now have to still deal with the current losses on their books, that they're currently nursing. So, even if inflation starts to go down, starts to trend from now to the end of the year, it's still a long battle for a lot of these companies to even get to break even.
Okay, we do hope companies will consider backward integration. Probably that will double down. We'll double down on that, and we'll see a change in the situation. Thank you so much, Nonse Asote Enaolo, investment analyst, Main Street Capital, for sharing your thoughts on Business Incorporated.
Thanks for having me.
So let's look at other markets now in the Middle East. Major stocks were closed Thursday, except in the UAE, where sentiments were mixed. Intraday, we see Abu Dhabi down massively, nearly 8% there. We're looking at what's happening there. Then Dubai index up 0.08%. Let's look at other markets now. We said it was closed. Tadawul in Saudi was closed Thursday, up in the green, 1.34%. Qatari was also up 0.55%. US markets, we're seeing that trending up, especially for the Dow Jones. It crossed the 42,000 for the first time ever. And, the markets are reacting to the the US Fed cutting rates by 50 basis points. Other global markets are also celebrating this. Some analysts are saying it came too late, but never too late for the markets to react to good news. So let's see Asian markets very quickly. The Asian market, we saw That market, Nikkei, was 1.53%, closing today's session, but down from 38,000, but climbing up because it was at 36 this week. Now, Kospi in South Korea up 0.49%, closed today's session, and the Hang Seng, as in China, 1.36% up. Let's look at Shanghai market to see that in mainland China, it was up 0.03%, and in Nifty in India was also up 1.2. So the markets are really celebrating the U.S. Fed cutting rates, and this is reflected in the green closes that we have seen. The Nikkei is picking up, recovering, rebounding from all the losses that they had. And I just hope that Nigeria's market mirrors this and not go in the red, because we are seeing other markets celebrating the U.S. Fed rate cuts.
I don't know why you had to go that way. You should be patient. We have our own meeting on Monday and Tuesday. That is going to feed into our markets.
Okay, that will feed into the market. But the U.S. has a way of influencing other markets.
All right, Will, thank you so much.